welcome to the Fireside. And for those of you that already heard Clarisse earlier, I think we're going to dig into some of that a little bit deeper, but we'll do a couple of quick intros first. So hi, I'm Elise Soucie Watts. I'm the Executive Director at Global Digital Finance. We're a nonprofit industry association. We work closely with many of the partners here as well as firms and really try to be a bridge between the public and private sector, a lot of policy work, feeding back to regulators, and really sharing how we can make more future-proof regulatory frameworks for the good of the ecosystem. So, would you like to introduce yourself?
Thank you, Elise. Hello, my name is Bernhard Elsner. I'm the Chief Product Officer at Digital Asset. Digital Asset is the tech developer behind Canton Network, a layer 1 blockchain with inbuilt privacy and the right controls for really RWAs at scale. So this fireside chat, right up my street.
Fantastic. And for those who haven't met Clarisse earlier.
Hello, everyone, and I promise this is the last time you're seeing me today. So I'm CEO and co-founder of Dfns. We're a tech custody provider providing technology mostly for banks and fintechs operating in digital assets. We secured over 15 billion euros so far, generated more than 15 million wallets, and yes, we're operating mostly with traditional players.
Fantastic. So we only have about 25-ish minutes to go, so I want to get right into it. And actually, maybe, Clarisse, if you could just set the stage for us, maybe do a recap for those who hadn't listened or hadn't been familiar with this topic, because privacy and security are really crucial. They've been coming up a lot lately. But why is it so important to come back to first principles when we're discussing this, and how do you think about that as a whole?
Yeah, I'll try to kind of give a bit more details than in the previous panel. As you all know, blockchain technology is irreversible. That's its beauty and that's its weakness as well, right? So you can achieve immediate settlement, but at the same time, if someone steals your private key, you have nothing left. When we think about this space and when we think about what has happened over the past years, the reason why we decided to build Dfns is because we thought that if we didn't build a strong and secure foundation for our ecosystem, we will never attract the larger players. We will never attract the more institutional organization operating in this space. And so security is absolutely fundamental because, once again, one hack and it's game over in blockchain, right? So when we talk about custody and technology, what we love talking about is mostly the recovery aspect, right? It always goes pair in pair with the recovery. You don't build a good technological custody solution unless you have a good recovery attached to it. It starts with one, how am I securing my key? And here, on our side, we've been starting with technology like multi-party computation, but over time, what we realized is that we wanted to make sure that our clients could operate in constraints that they knew, that they were comfortable with, for which they probably already have DRP system in place, already have BCP continuity plan, right? So there's the really kind of very important subject about the technology of storing and securing the private key, which is, which technology I'm going to use, how am I going to implement it? Is it going to be on-prem? Is it going to be through a third-party provider? Do I need to comply with DORA, and so do I need to have redundancy there, right? And then there's everything that is around. And I'm going to go back 2 seconds on the corporate security, because you're going to hear me say that a lot today. Corporate security is of the utmost importance. You can have all the cold storage solutions in the world. If one person has access to it and this person either goes rogue or is being the victim of any sort of, hack, social engineering, etc., then you'll lose access to everything. So when we go back to the Bybit hack, because at the end of the day, it's the best example we've seen recently about that example. As I was saying, what happened, and when you wake up to, I think it was on February 19, when you wake up to this news that Bybit has been hacked for 1.5 billion euros, the actual hack took place months and months ago. When the Lazarus group operates, they operate very methodically. And so what they will start doing is actually looking at the engineers, who's working within the company they are targeting. In this case, they're targeted safe directly. And how it works is that they send LinkedIn messages to all the engineers asking or showing or presenting job offers. One responded, started chatting with the recruiter, and he was sent with a file to actually run a code exercise. He downloads that PDF, and this is it. The hackers are have actually put a backdoor in the computer of that engineer. Then what happens is when you start putting a backdoor in a computer of an engineer, you start looking for very sensitive material. What can I access through this computer? And in that very specific case, they find gold because they find the authentication access to the AWS S3 bucket of SAFE. What it means is that there was one engineer that had root access to the most sensitive, potentially, piece of software of their organization. And so when they had that, then they took their time. They looked at how SAFE would actually integrate with ledgers, etc. They really spent a lot of time looking at the smart contracts and how they could structure their hack. And so when they actually moved on February 19, what they did is that they replaced a piece of the code that was present in this AWS S3 bucket, which was the UI code of SAFE, so just how the actual SAFE code is being represented when you're signing a transaction. They replaced that piece of UI with a piece of UI that was compromised, so a piece of code for the UI that was compromised, and they changed two things. First, they targeted the hack, which means that they only targeted Bybit wallets, so they removed all the other potential clients of SAFE that could have been also under hack there. And then what they changed is that when periodically Bybit was approving this 30,000 ETH transaction, instead of seeing that this was actually sent to their treasury wallet, which was the address of the wallet, they replaced that address wallet in the backend with their wallets, right? And so on the Bybit side, what was approved is exactly the same thing as what was approved every day, right? Why am I spending some time on that? And I'm going to stop now. Why am I spending some time on that? Is because security is very important, but it's not just the private key security. It's how all those organizations operate. Obviously, take custody provider, but banks, fintechs, exchanges you're interacting with, right? And so on our side, this has to be taken very seriously. And so when you trust SAFE because they are a crypto-native players that have been around forever. But if you're a CISO at a bank, the first thing you would ask is, what's their SOC 2 Type 2? Are they ISO 27001? And in our world, nobody think about asking that, right?
And I think this is so important because, as you say, a lot of these things, and I heard you say it earlier too, they need to be more standardized across industry. There needs to be that interoperability across the TradFi and the DeFi world so that everyone's operating to those same high standards. And as well, you mentioned Lazarus Group, equally super important to think about, from a nation state perspective. A lot of banks, when they think about their penetration testing, they think about, what nation state hackers do we need to be aware of and have on our TTP radar because of where we're located, where we're based, et cetera. And I think that that's going to need to be done more and more in the kind of crypto space as well. So, but it's a really, really important, I think, explanation and overview about the importance of security and not just the key issue, but along every single step of the way. And I think that's also why we've seen a lot more focus from regulators as well on critical third-party outsourcing and making sure there's that overall resilience. But I want to come to Bernhard to pick up the privacy point as well, because I think so often people conflate security and privacy and think of them as being exactly the same thing. They're not. Can you unpack that a little bit for us as well? And what is the importance of privacy from your perspective, as well as security when it comes to tokenization?
Yeah, for sure. So privacy and security are used sort of back to back here, in part because I think they are both prerequisites really for digital assets at scale. What do we mean by at scale? It's really, as Clarisse already pointed out, about the institutional scale, right? Crypto and digital assets today already have impressive volumes, but if you compare what's happening in crypto, with a 3 trillion market cap to the total volume of outstanding assets in the $300 trillion range, or the annual payments volume of $2 quadrillion, it's a drop in the ocean, right? So to do digital assets at scale, we need to bring all assets on-chain and to somehow allow traditional RWAs to meet the financial innovation which we value in the public networks. And for that, both the sort of security aspect, especially sort of the sort of operational security that Clarisse talked about is key, but also privacy. And it's very easy to see the privacy aspect. Actually, at events like this, I love running a little experiment. I've actually done this a couple of times today. I ask people, if you could have a payment card today to replace your credit card that just moved stable coins on-chain, would you actually use it? And to date, I have not got a clear yes yet. And the reason is that everyone understands that our financial data, our transaction data, is really valuable, right? We know how that can be used to manipulate us, to defraud us, and that is only worse in the institutional space, right? Businesses don't reveal their day-to-day financial transactions. They make very discrete, select disclosures once a quarter or once a year. If you think about the real financial institutions that are busy, in trading, just revealing their trading strategies, their portfolios, it just won't work, right? So we really do need privacy for real if we want to see digital assets at scale. And a little bit like with the the security aspect, once we start relying on the fact that our digital assets are kept safe either through self-custody or through trusted institution, right? It becomes a security risk. And similarly, once we start relying on privacy, be that pseudonymity or pseudonymity on public chains, be that through fancy cryptography, be that through services like off-ledger collateral sort of custody, we start trusting something or somebody to actually maintain that privacy. And in that moment, it de facto becomes a security concern, because if the privacy gets broken, we have what we know as a privacy breach, and the monetary loss can be really material, can destroy lives in the consumer space. And so I think whilst securing sort of the ability to move the asset and sort of controlling the data are somewhat distinct, they are both large parts of the sort of the risk profile that we need to get under control to actually make digital assets at scale happen. And one of the questions I sometimes get is, well, is it possible to quantify the value of privacy? And it's actually really difficult, but I like to point to one example, which is that there is now $100 million plus market in MEV on the public chains alone, where the business is simply observing trade orders and sandwiching them to extract a little bit of arbitrage, right? And that is a tiny, tiny, tiny bit of privacy, because really to get rid of that, you just need to delay information being revealed a bit. And there's now a whole cottage industry about private mempools and buying people, to use those private mempools. So within the crypto space already, $100 million is a really lower bound for the monetary value of privacy. So we really must solve this problem if we want to see scale.
And I think as well, you've raised a couple of interesting points there, which is that, privacy, we also need to break down what kind of privacy we're talking about and where we want it and what kind, because this also looks very different in the retail and wholesale space, and whether you're thinking about these large volumes of transactions, or what I think a lot of times people just think of privacy as in for you or I as an individual, and those are different things and they can be enabled in different ways. So I would actually ask both of you maybe for your thoughts on how we enable a bit of modularity there, because not all privacy solutions are created equal, not all work for all types of business models. So what are your views on how we can actually think about building that in, where and what kind is needed? And Clarisse, maybe I'll start with you.
Is the expert, but no, absolutely. I think it and what we've seen and the way we're actually thinking about our roadmap, how we accompany our clients, is that really being close to their use cases, right? We're building on our side tech custody, but we're building for specific use case. And not all use cases need the same type of technology, right? And so you have use cases for which, both from a technical standpoint, you will want to have very different deployment on the key deployment service, but then after on the upper side of the stack, you may need to actually have segregated wallets. You may need to actually operate in an omnibus. So for me, the key to answering this question is always to not have an ideological view on what is and should be, but go back to, okay, what is my use case? Who am I selling to? What are my constraints in terms of regulations? Where do I need to apply these specific features? And so the key is modularity. I think you say it, is to make sure that you can build a platform that is modular enough that one day you'll be building on Canton, because you have actually use cases that are use cases on trading side, handling collateral management, or actually payment use cases. And I'll come back to that because I think it's a very important one. We all are super excited about stablecoins, but we're not going to, we're not going to create a wholesale payment market with public blockchain. That is not going to work unless there's some confidentiality and privacy features enhanced to it. And so this is how we see our mission. It's about enablement of the technology that are suitable to the use case. And I think what is super interesting over the past 2-3 years is that there's been a shift in how people think about it. When I started working on defense, the big thing was about custodial, non-custodial. How do you prove that it's non-custodial? We were staying hours and hours in debates about this very specific, about sort of really ideological preconception about what hardware security gives you versus cryptographic security, right? So I think we're past those debates, and we now really see that the technology serves a specific use case, and when we've past that part, it's all about making sure that you can combine it in a way that makes sense. So I'm going to take one example. You building a payment platform, a cross-border payment platform for B2B. Well, probably hot wallet structure is going to be more important to you. Some sort of privacy on the blockchain is going to be important. You're going to have to segregate your wallets for your merchants or your corporates on both sides of the party. Are you regulated in one side of the lake, on the other side of the lake? So maybe one party is custodial, the other one is non-custodial. And that's how you think about the architecture today of your use case.
And do you see the same? And maybe you could give us a couple of practical examples as well as how Canton is building in those guardrails at the outset and how you think about it.
Yeah, for sure. I think that's it's really important question, how to build those guardrails, right? The realization that there isn't a one-size-fits-all model for security and privacy is really important, right? If we imagine, a future where you want to be able to pay on chain for your NFT with bank deposits, clearly your NFT and your bank deposits just have a completely different model. But to make that relatively simple transaction happen, you need to have a venue that can support both. And that's where I think the rhetoric in the space over the last years has been a little bit broken. We effectively had a tug of war between two extreme ends of the spectrum when it comes to the privacy and security model. On the one hand, we had the public permissionless chains, basically arguing that full transparency and letting anyone in the world take care of running the smart contracts is the one and only model. And you had the regulators push the enterprises into basically private permission silos where they can have extremely hard guardrails in place. And each side somehow spun a story that they would somehow move in the other direction by either adding fancy cryptography or later bridging across and so on. But I think those narratives are really not playing out. So if we do believe in a future where finance can happen at scale on chain and really allow the traditional market players, the large institutions, to meet financial innovation, we need venues which actually support the whole spectrum of privacy and security models. And this is why we, building Canton Network, we took the approach of really trying to make these things as configurable as possible, really at an application and smart contract level, right? We need to be able to have in the same venue with the whole interoperability magic that blockchain provides, completely centralized registered securities, issued by the CSDs, as well as decentralized, novel business models and types of tokens. right? And I think the former, there's sort of an easy sort of thought experiment there. If you use stables, right, even though they don't have privacy, right, the stablecoin providers have a lot of control over those stables on the public chains, right? So how much value is there really for Joe off the street? Is this microphone on and off? Oh, okay. For Joe off the street to, to be able to basically second guess the stablecoin providers to validate the work they're doing. Because ultimately, they can seize, freeze, burn any coins they want already, right? So already the security model for many assets on the public chains doesn't match that of Bitcoin, right? And we really need platforms that don't require asset tokenizers to effectively tack on their security model, but that can actually support these different security models natively out of the box.
Well, it's a really interesting point because in a way, it's almost like we are taking a step back in some ways, back to like, where we were with traditional rails and thinking about actually if we want to get to those levels of privacy and security that we have in the overall financial services system, how can we do that with the new technology as well? And, you mentioned payments, but also the wholesale space. So it would be great to get your thoughts there on, where this responsible innovation with the security and privacy we've talked about at the outset can actually scale and where we can get there responsibly.
So when I heard that Coinbase was paying the suppliers in stablecoin, at first didn't really kind of didn't really make me change my mind or think about the usefulness of privacy preserving blockchain. But then I heard that those suppliers were actually quite complaining about the fact that those terms were out in the open, right? So when Coinbase pays their suppliers, everybody knows about the amount that those suppliers are charging Coinbase. And I think this is such a very important realization. And so when we started integrating Canton, so a few months ago, we started because we had actually demands. Everything that we build because we see a use case. So we had actually demand to start leveraging privacy-preserving technology in order to address this type of use cases. And payment is a very important one. And so when we made actually the announcement that we were supporting Canton with our wallet technology, to my surprise, most of the players we came and requested from Access were actually not the largest institutions building tokenization platform on Canton. Some of them are, but it's a slower pace. But a lot of fintechs, actually, a lot of people actually building cross-border payment platform, wholesale payment solutions, stablecoin issuers, small stablecoin issuers wanted to make sure that they could address this type of use cases. And I think this is, once again, we're moving away from ideology, POCs to real-life use case. And this is, to me, the realization that you need to pick the technology and make sure that you have the properties that will resonate with your market. Otherwise, we're never going to take this technology everywhere, right? Otherwise, we're building very nice conceptual ideas, but that are not solving any problem in real life.
Totally fair. So we have only about 5 minutes left. So I want to end with the same question for both of you, two-part question, which is first, what is the biggest and specific privacy or security risk that you're worried about? And then also, what is one kind of takeaway that you have for the audience of, as we've talked about through this whole session, how to build that in at the outset? What's one practical thing that they can do to enable both privacy and security? And I'll start with you.
All right. In terms of the risks, I think Clarisse already pointed to it. Trust is hard to gain and easy to lose. And as we're moving into a really exciting phase now, where finance at scale is moving on chain and leveraging new properties like privacy, major breaches like the Bybit one in the traditional space can really erode trust. Crypto somehow gets away with this, and I think it's in part that it is seen as a slightly innovative space, right? And people are taking the risks because of the enormous yields that are available there. But a Bybit-like hack for a traditional financial institution, I think, would be disastrous and undermine the trust that is currently driving real-world asset adoption of blockchains. In terms of the opportunities, I think we're in a really exciting time. right? We're seeing a fast accelerating sort of trend for traditional financial institutions to embrace the technology, to bring RWAs on chain. And we're also seeing technological advantages like networks with privacy enabling that. And I think that creates opportunities all over the place with real first mover advantages. There are whole new, I would say, sort of areas of complementary services to offer to the large financial players to make it easier for them to offer the services to the market. There are whole new business opportunities on the sort of the intersection between crypto and traditional finance, right? How can you make a business that somehow combines the traditional assets that are on-ramping with the existing digital assets? New properties like privacy, I think, also open up by now established markets within the digital asset space, right? At this point, things like crypto custody solutions, AML solutions, data solutions, reporting solutions, they're all established categories with real incumbents. But they're all built on a very fundamental assumption of how blockchain networks work, with full transparency and what sort of assets are traded there. So as business moves to venues with privacy and to more traditional forms of assets, I think all of those categories will need slight reinvention. And I think that really gives an opportunity to disruptors as well, to really gain market and mind share. So my advice is really to focus on all those new areas of opportunity that are opening up because of this momentum of RWAs and privacy.
Great. So loss of trust, biggest risk, and then the opportunity is to kind of find that perfect combination between the transparency and the innovation we've learned while still building in the privacy and security. Clarisse, what would yours be?
I think we're excited about the fact that we now see use cases outside of crypto trading scaling, right? So first, we're actually very focused is to make sure that we can enable our players to scale without adding any additional risk in the most secure way possible. And so we like to come back to kind of the first principle, which is the transaction, right? So how do you make sure that, first of all, a transaction goes through, that it doesn't fail? Blockchain technology is still very recent, and so sometimes the saturation of some networks make it very hard for massive and numerous transactions on some networks to go through without failing. So that's kind of the first thing, working on those first principle, making sure that it goes through in a compliant way from the view of our clients, so respecting all the permission management that our clients have in place, making sure that they can be extremely granular, that they can enhance and be compliant with the regulations they're operating with, such as DORA framework, which is asking for very clear segregation of duty, right? So it works, it's compliant, and then it enables a use case that is going to be specific and very different among the different clients that we support. So to kind of come back to your point, I think first the opportunity is it's to make sure that we focus on what's working, what's scaling, and enabling our clients to do so with the right tools that they actually need to be able to be successful.
Fantastic. Well, thank you so much both. I don't think we have any time for questions because I want to end on time, but please come find us in the break if you'd like to discuss further. Thank you so much.